in Duluth, Georgia, outside of Atlanta, Jacksonville, Florida, Tempe, Arizona, and Burbank, California. Go to jimmydore.com for a link for tickets. Our favorite money guys with us, Paul Stone, is the co-founder and CEO of Colonial Metals Group, an advertiser on this show, a Florida-based precious metals supplier that helps clients develop secure retirement plans by investing in gold and silver, which I have done. His writings appear on his Substack at thepaulstone.substack.com. Welcome back to the show, Paul.
Absolutely great to be back. Thank you, Jimmy. How are you?
I'm doing. I'm a little exhausted. I could use it as a vacation. Thanks for asking. But I saw this article in Bloomberg, and of course, I'm like, well, this is right up your alley. So it's this is from today, August 26th at 6 a.m. Gold bulls celebrate as Jackson Hole reinforces bets on rally. Why can't they just speak in normal language? Anyway, so what that means is that people who are bullish or people who are pro gold, they celebrate as the Fed chief gave a speech at Jackson Hole to reinforce their bets. Well, let me just get through it here a little bit. Gold's record-setting rally. I didn't know that gold was on a record-setting rally, but it is. Gold is on a record-setting rally above $2,500 an ounce. Looks to have further to run, even further to go, as the Federal Reserve prepares to chop rates. Traditional drivers such as low yields return, and Western investors pile back in. So, Paul, tell me, why is it when the Fed chief is when he's predicting or he's signaling he's going to chop interest rates, that's what that means. Why does that make gold more attractive to people?
I've mentioned it before. If you considered cutting interest rates, jumping on the gas pedal in your vehicle, and raising interest rates is applying your foot on the brake. We don't want to drive full throttle, right? We don't drive full speed.
Right.
We moderate, and we're constantly using brakes and gas pedal, right? So if interest rates, if you look historically, before all the money printing started, before the 70s, generally averaging around 5 or 6%. So that's normal. So that's a good gas pedal and brake relationship. So here you are with this, wonderful expanding economy and everything's great. You have to start cutting rates. That means you have problems beneath the surface. So you need to start flooding the financial sphere with cheap dollars again. If you have infrastructure issues, erosion issues, fundamentals breaking apart, people look at gold and silver as a relief valve, right? An escape hatch, a bunker to lock in those great gains. Signals are now showing up for that those gains might not continue, and isn't selling high part of the equation. So when you leave these other typical realms for having your investments held for something safe and something outside of all that, gold and silver's prices go higher. The other thing about it is the attractiveness to just something going higher, right? As something goes higher, it catches more attention. It implies strength. It implies security as something seems to go higher in value. And gold indeed is that, because gold is never not gold.
Right. So do you think, well, let me just read a little bit more. So everybody thought the Fed was going to be the last to cut, but now they're getting in line. This guy says, who recently went long. He went long on gold options. This guy, he's the chief executive officer of Infrastructure Capital Advisors. He recently went long on gold options for the first time in years. Do you know what that means? What does that mean when someone says they go long? It means that they're investing for the long term.
Well, it means that they're talking of investing in virtual gold, which would be an ETF. You don't hold anything in your hands. There's nothing physical in your account. Options, meaning you could, again, this is a very rudimentary, plain explanation. Do more research if you were to consider ever doing anything with options beyond what I'm saying. But an option is to buy something at a later time, maybe at a higher price. So It's not owning the actual investment or the security or the physical ounce of gold.
Okay.
It's virtual. We recommend people consider how fragile that virtual world actually is and look to make their money physical, their retirement savings especially.
So ETFs, so if people don't know, I looked it up, and what I was able to garner what an ETF is, it's kind of like an investment firm, right? It's almost like a mutual fund where gold might be one of the things that they have their money in, an ETF, right? It's called the electronic transfer. I can't even remember what it stands for, but I know what it is. So that's what so think of an ETF as like an equity firm or an investment firm. That's what an ETF is. So Chair Jerome Powell's Jackson Hole speech, which promised, they go to Jackson Hole. That's funny. Which promised race cuts, was a watershed moment for bullion, according to Hatfield. Now, bullion, that's another term for gold, right? That's what they mean. Mm-hmm. So gold gets boost as ETF flows turn positive. So the red line here is ETF holdings. See, it's going up. And the black line is gold, and it's going up. Right. Look at that. It's up to 2,500. Look at that. So as bullion has dazzled this year. So gold, so another term is gold has dazzled this year, setting a procession of records that marked out the precious metal as one of the strongest performers among major commodities. Its ascent in the first half came courtesy of strong central bank buying plus Asian purchases, which offset the drag from a rising U.S. dollar, higher treasury yields, and outflows from bullion-backed exchange-traded funds. Now, all three of those drivers may run in gold's favor. So that's interesting. That opportunity cost of holding gold is coming down, said Raif DeMello, a global macro portfolio manager at Gamma Asset. So the opportunity cost of holding gold is coming down. Can you explain what that means, the opportunity cost?
I think what they're getting at here is, if I could give you an analogy, if you were paid 7% a month to park your car in a certain garage, right? Or if they opened this garage and said, hey, we're paying 5%, we're paying 6%, we're paying 7%, people start parking there, right? Think of your money as that car. And then they start reducing how much they're going to pay you to park in that car. You're going to drive away and look for something else. The smart folks are seeing that cutting rates is a signal. I mean, the Fed is paying over $1 trillion a year in interest on the debt. So they're having to deal with these high interest rates as well. They would like to cut those. Again, that's another humongous sign of a gigantic problem that isn't going to go away per the history books and per everything that's ever come out of Washington or Wall Street. The reason for printing money, causing inflation, causing higher interest rates, then cutting those rates right before an election, and also to try and help things look easier and stay vibrant, right? Flood the world with more cheap American dollars, again, is then going to cause and inspire inflation, which is then eventually they're going to have to raise rates again. Eventually, the whole thing collapses because you run out of the resource called the dollar. Right. That's why I keep beating that drum for folks to take notice that it's only worth 2.7 cents. As they print, they kill the value of the dollar. Can we all understand that eventually it gets to zero?
Yeah. So the more, I took Econ 101 in college, so I understand that, the more of something there is, right, the less its value, right? So if they keep printing these dollars, it's going to be less value. Now in 2000, the number you use is that the dollar was worth 56 cents. Now it's worth 2.7 cents, right? Which is why housing prices have inflated so much, and now it's out of reach to people. And it's because of a big part of it is because of the money printing.
Yes, the whole thing is the money printing. I've done some rudimentary calculations just to try and understand how big of a black hole are we actually in. And I ask folks, when they report that GDP is a positive number, just consider that revenue for the year for America Incorporated, everything that happened with an American individual or a business as revenue. Did we grow this year or shrink? Since 2008, that would be a negative number without the printed money.
Really?
The government raising the debt ceiling and the Federal Reserve doing what it does behind the scenes. It would be a negative number since 2008. Negative GDP growth, down, a shrinking economy if it weren't for the printed money.
Well, the good news is that all these things are making gold skyrocket and more attractive. So this guy says the opportunity cost of holding gold is coming down. This very fast decline in real yields and the weakening of the dollar generally, which is what you've always been talking about since you started coming on the show, makes me quite happy to use gold as another currency to be short the dollar. So far in 2024, spot gold has rallied by more than a fifth, with banks including Goldman Sachs Group Inc. saying as far back as April that prices had the scope to hit $2,700 an ounce. After Powell's roadmap at the Jackson Hole Symposium on Friday, U.S. 10-year real yields have now retreated to the lowest since December. That benefits gold as it doesn't pay interest. Right. So is he talking about when he says U.S. 10-year real yields? Does that mean on T-bills?
Yes.
Oh, okay. And so that benefits gold as it doesn't pay interest. So
right, because the amount you're getting paid to have your car in that parking spot is declining. As they cut rates, then they're going to take rates down. You're going to get paid less to have your car, like, for instance, parked in a CD.
Right.
Right. And that's something else that hurts the infrastructure of the financial world is when we leave the investments they want us in for a CD or a bond, right? Then that money isn't in the general marketplace. It's kind of moved off to the sidelines. And so they want that money back, right? So if you cut rates, the Fed pays less on the interest on the debt. You grease the system to go flying back into typical investments that have more risk in them, perceived risk in them, than a CD.
Yeah. Okay. So that's funny. That's where I have my money. I have my money in gold, T-bills, CDs, and some in Bitcoin. That's my gamble. Bitcoin's my gamble. I'm really going to gamble on it.
And because you didn't want the stock market because you couldn't trust it.
I don't want to put my money in the stock market. Anyway, so that's just me. That's me personally. I've never liked the stock market. Ever since 2008, when I see it's run by complete criminals. Anyway, hedge funds and speculators have been adding, and if I wanted to, you go invest in Raytheon and go invest in a weapons manufacturer, you're going to be doing okay. But I can't take that kind of money. I don't want to invest in tobacco or poison, and I don't want to in bombs. I don't want to do that. But anyway, hedge funds and speculators have been adding bullish wagers on COMEX. That's just like that's the Wall Street for precious metals. Hedge funds and speculators have been adding bullish wagers on COMEX, with net long bullion positions hitting the highest in more than 4 years. There are also signs of a revival in demand for gold-backed ETFs. Holdings in SPDR gold shares, one of the leading products, have expanded for the 8 straight weeks, the longest run of inflows since the mid-2020. So gold is really booming right now. To be sure, even with Western investors warming to the precious metals, prices may be vulnerable to softening consumption in Asia, where lofty prices have hurt demand. China's central bank also recently paused its substantial monthly purchases, weakening 2 of the pillars that helped lift gold in the first half. For now, though, Citigroup Inc. sees inflows into ETFs expanding significantly over 6 to 12 months, with demand bolstered by looser monetary policy as well as a potential increase in volatility among recessionary risks. Gold may reach $3,000 an ounce by mid-2025, the bank said in a note before Powell's address. So
right.
It's really notable that people are actually starting to move to that physical gold ETF side now, said Ryan McIntyre, managing partner of Sprott Inc., a Toronto-based precious metals and critical minerals asset manager with $31.1 billion in assets under management. Buying through the ETFs is going to be a big part of gold's story. So that's the good news about gold right now. And I've had many people, you included, but I've had other people who don't, have a gold company, don't trade in gold. People are into Bitcoin, have told me, yes, gold's a good hedge. I've had people who run hedge funds, billionaire hedge funds on Wall Street say, yeah, gold is a good hedge on all that stuff. So that's where I'm putting it. Any more comment on this story, Paul?
Just the other side of the coin, if you will.
Do you want me to show that? Do you want me to show that thing yet, or you want me to wait?
Wait 1 second.
Okay, go ahead.
Just to wrap up here on this story that you're interested in talking about is the other coin is for people who may not even like gold and silver. They may not like the idea or think it's a nuisance or annoying to go through the work to move money into physical gold and silver. All kinds of questions go, where am I going to put it? Heck, I can't go shopping with it. What would I ever do with it? Please take a look at the severity of our political landscape, the severity of this financial erosion, that gold and silver is going higher when all of the signals that come out of Washington and Wall Street is that everything is awesome here in America. Please understand better than gold and silver going higher this year is that it's a location for money. So when you hold something electronically, how many different hands does that transaction have to go through that you don't control and don't understand just how good or bad they're actually doing behind the walls, behind the surface, right? When you own physical gold and silver, you don't have to worry about all that. All those dependencies are gone. Gold and silver is in a safe at your home. It's in a depository. They're all private, insured, and armed guards and all the lights out security measures that exist today in these depositories. If you had to, you'd ride a horse there and ride off with your gold and silver. If things ever got that bad, that would be the only thing you'd consider money is gold and silver. But on the other side of this very disruptive and ugly financial chaos that this period of time that we'll likely have to go through soon, on the other side of that, you come out of gold and silver and go back into something else. You go back into some other version of money, whatever it is we're using down the road. I'd like people to understand you may not like gold and silver, but please sober up to the fact that there's so many reasons today screaming at you to pay attention that you ought to have some.
Hey, I believe in having a substantial percentage of my financial future secured with gold and silver. That's why I decided to partner with our sponsor, Colonial Metals Group. They helped me set up a safe and secured self-directed IRA where I have access to my assets no matter what the stock market, or for that matter, what the government is doing. Let the team of experts at Colonial Metals Group help you protect your family's future. We put together a special offer for our audience. Click on the link in the description below or call the special 800 number and you'll receive a safe and up to 10 grand in free silver. That's real. Up to, depending, but go find out. Go to colonialmetalsgroup.com/Jimmy-Dore-show or call 888-910-1419. Hey, come see us on tour. We're going to be in Duluth, Georgia, outside of Atlanta, Jacksonville, Florida, Tempe, Arizona, and Burbank, California. Go to jimmydore.com for a link for tickets.